Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we will be reviewing Nigeria's first quarter 2024 capital importation numbers published last week by the National Bureau of Statistics. Capital importation refers to the inflow of foreign resources into a country through investment, trade credits, and loans. It plays a crucial role in enhancing foreign exchange liquidity, funding businesses, creating employment opportunities, and supporting growth and stability. Capital importation is essential for a country's economic development as it provides the necessary funds for investing in infrastructure, businesses, and other developmental projects. The NBS divides capital importation into three main investment types, each comprising various subcategories: foreign direct investments, equity, other capital, foreign portfolio investment, equity bonds, and money market and other investments like trade credits, loans, currency deposits, and other claims. Under Nigerian law, foreign investors must obtain a certificate of capital importation (CCI) for any foreign currency, materials, or equipment brought into Nigeria. Issued by a Nigerian bank within 24 to 48 hours, a CCI confirms the investment and ensures access to the official foreign exchange market for transferring capital and returns. In the first quarter of 2024, foreign investment inflows into Nigeria rose to the highest in 12 quarters, reaching a total of $3.4 billion, $5.9 billion in Q1 2020, which represents the 210% quarter-on-quarter jump from Q4 2023 and a 198% year-on-year increase compared to Q1 2023. A further breakdown shows that portfolio investment printed at $2.1 billion or 61% of the total capital importation in Q1 2024, its highest contribution since Q1 2023. This translated to a quarter-on-quarter and year-on-year growth of 570% and 220% respectively. Money market instruments accounted for 78%, while investment in equity and bonds accounted for 2% or $49 million and 20% or $420 million. The harmonization of the foreign exchange rate market, the clearance of forex backlogs, and the hike in interest rates by the Central Bank of Nigeria (CBN) boosted investor confidence, which supported the entry of foreign capital into treasury and automobiles. Other investments grew by 99% quarter-on-quarter to $1.2 billion, accounting for 35% of the capital imported in Q1 2024. Loans accounted for 97% of other investments, while other claims contributed only 3%. Other investments encompasses various forms of investment including loans, trade credits, and other financial transactions. The substantial share of other investments underscores the diverse nature of capital inflows beyond traditional equity and debt markets. Foreign direct investment (FDI) contributed the least to capital importation at $0.12 billion, which represents 4% of the total. This was driven by a sharp 35% quarter-on-quarter decline. Nigeria consistently struggles to attract foreign direct investments (FDIs) due to its unfavorable business environment and inconsistent policies. The FDI remains crucial as it typically involves long-term commitments to the Nigerian economy and can lead to job creation and technology transfer. By sector, the banking sector recorded the highest inflow, with 61% of total capital imported in Q1 2024. This was followed by trading with 15% and the production or manufacturing sector with 6%. Analyzing capital importation by source countries reveals countries with strong trading relations with Nigeria. The United Kingdom emerged as the largest source of capital importation, contributing $1.8 billion or 53% of the total capital importation. The Republic of South Africa was the second largest source with $582 million or 17%, and the Cayman Islands contributed $186 million or 6%. This indicates a strong regional investment presence and highlights the importance of intra-Africa economic relationships as well as the involvement of global financial hubs in channeling investments into Nigeria. By states, Lagos State was a top destination for capital importation, receiving $2.8 billion or 82% of the total inflows, followed by the Federal Capital Territory, Abuja, received $594 million or 18% of which Ekiti State received a nominal $0.01 million. This indicates that capital importation is concentrated in major economic hubs. The disparity among states underscores the need for policies to promote regional investment and balanced economic development across Nigeria. By banks, Stanbic IBTC emerged as the leading bank, receiving $1.2 billion or 37%. Citibank followed with $548 million, representing 16%, while Rand Merchant Bank PLC received $529 million or 16%. These three banks accounted for 69% of the total capital importation during the period under review. As Nigeria strengthens its economic fundamentals and investment climate, the outlook for capital importation remains positive, promising further growth and development for the country. The data from Q1 2024 is encouraging, but it's crucial to maintain this momentum. Consequently, implementing investor-friendly policies and addressing underlying issues hindering future investments are essential for further growth and development in the country. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070 82 463747. Stay blessed.